What is going on? Happy hump day. Hope everyone's having a decent week and a decent day, whatever it is you are up to. We've seen some pretty big movements already this morning, as obviously we kind of approaching a day today where some fundamentals are going to come to light, starting to get early NFP figures and employment data and payroll changes from the US, which always has obviously a big old impact, as we know. So within that sense, obviously what we're likely to see today is obviously some sideways movement and a little bit of not really a lot going on throughout this morning, and then obviously as we progress through the afternoon, we're very much likely to see some changes occur. We start to see some movements start to make waves. Obviously, already this morning we are seeing gold make a move, which is nice. That's something that I got involved in yesterday. So the fact that that's now starting to move on and starting to kick on a little bit is obviously a massive positive. So we can keep an eye and have a look from this. Obviously, what we ended up seeing yesterday was that the previous support, just going to come to the 4-hour time frame very quickly. What we're seeing is that the previous region here that we used as resistance, and a little bit of support over here, is now flipped back into its resistance role. And looks as if it's going to start to push price back to the downside, which obviously is a massive, massive plus for those that are in short positions. Now, we're still very much optimistic and looking to target at that 170, at that 17 region. So the whole number at 1700 there. But we have to be very mindful. Obviously, around this little highlighted region, we started to see some reaction yesterday. So now that we're back involved in that zone, it's another area that we do need to be very, very mindful of. If obviously we fail to get back below this region, then we're going to struggle for potential further movements. And that's something that obviously we need to be very, very cautious of and very careful of. However, if we get below 1724, then what we will probably likely see is quite a sharp push down. That will likely see us lead into that 1700 zone. So what that provides for us is obviously a lovely 240 pip position with very, very little real risk involved. So it's a massive bonus and a massive positive for us to have an option like that available to us. Currently running, as I say, about 90 pips to the good on it. Certainly targeting down at the lows, and then obviously 117 in extension to that. So we shall see how that fares out this morning. I just want to clear the drawings off. These are from lessons last night, but we're seeing Aussie dollar failing to break back above previous highs. Lower low, lower high. Now we're starting to get back below this support region. What we could well be about to see is a potential push to the downside on Aussie dollar, which also looks good for Aussie Swiss too. Obviously, we're still seeing price float around this area, but we are starting to see signs that we may have found a little bit of resistance. We can see that given the moves that we've seen this week already from the pair, the fact that we've now started to stall and actually find an area of price that we seem to be failing to break above, it looks like we've got the potential then to look for a short if we can break back below the lows. That's not obviously dead set at the moment, given the strength that we have seen and the fact that we're still kind of creeping higher and higher each and every time. So we need those lows to be taken out before we can take a trade. That much is painstakingly obvious for us. above this level, above like 71.80, still definitely gives us the option for the long to continue back to 72.80 also. So there are potential positions all over the place. We just need to be mindful enough to wait that out at the moment as things stand. But certainly Aussie Swiss above 71.80 is presenting an opportunity, and below the low, so somewhere around 71.50, 71.40 makes a lot of sense also. 71.40 would be my preferred option, the preferred entry to get involved at 71.40 to take down to 70.50 or 70.40, somewhere around that region. I think that presents us with the best opportunity for a decent risk to reward. And obviously would see us, if we were to crash below that 70.50 region, would see us continue the downward pressure that we saw come in towards the end of last week also. So it would give us that lower high, meaning that the lower low is probably the most likely scenario as a result of that, and likely to see us push down to 69 or 69.20, somewhere around that region. So we're at quite a significant level for Aussie Swiss. Where we go from here could have significant repercussions for not only the remainder of this week but into next week as well. And we're also seeing a similar situation on CAD Swiss. We can see, obviously, we've seen quite a push up already this morning. That's, to be honest, with the way that the Swiss franc has been, that's fairly kind of expected at the moment. But we are now back into a major resistance level where we started to see that sell-off come in last week. We may be set to see that continue also. That then obviously transpires into dollar CAD longs as well, the failure to break the lows. So with CAD Swiss, obviously we are currently rejecting away from this region at 72.70, and that is obviously a big positive. If obviously what we can then see is a push back down towards this area, so 72.50, I think 72.50 would be enough to warrant getting involved in potential short positions. Certainly if you were to pop out at the bottom of 72.40, then I think from a trading point of view that would be more than enough confirmations to probably warrant getting involved in a position there. So CAD Swiss I do like. Again, there's still the potential for the longs given the fact that we've got such a weak Swiss franc. So we do obviously need to be very mindful of that situation also. So it's a case where we don't have clear-cut positions, but we're around so many key levels at the moment and so many key scenarios that one of these things to break our way is probably going to lead into the rest of them coming into play also. So it's such a big time to be involved in and to be looking at these pairs at the moment. So CAD Swiss above, obviously we would want to get above and clear of the 80 region before we got involved. But from 72.80, then we do obviously have that run to 74 that we can be mindful of. That said, obviously given the fact that we rejected from here on Friday, and this is where we started to see that sell-off on Thursday, Friday last week, then obviously we're now in a situation where we could potentially be looking for a similar thing to occur. If we can fail to break the highs and get a close back down below, as I say, this kind of 50 or 40 region, then I would imagine that that's probably going to be odds on for that short and the failure to break those highs. So it's definitely something to be mindful of and something to be very aware of as things stand currently. So we will endeavour to watch just for the time being, see what occurs. But as I say, with gold looking like the dollar is strengthening up and that's potentially trying to make a move, with Aussie Swiss potentially looking to make a move, and CAD Swiss potentially looking to make a move, then dollar CAD longs look highly probable also. So as things stand with dollar CAD and potential long positions there, we are reliant a little bit on a few things coming into play. So as things stand, obviously, we are failing to break the lows. And that failure to break the lows, as we know, typically will lead to a potential push to the upside, which is obviously what we want to see. We do need, however, to break these highs. Obviously, we can see through this highlighted region the amount of times that we've spiked into this zone. We've used it as support. We've used it as resistance. We keep coming back and forth on throughout this zone. So it's something that we do need to be extremely mindful of. And extremely aware of as things stand and us moving forward throughout the pair. With that said, obviously, there's still a lot of potential once you get past it. If we can break above that region at kind of 26.40, that is very much likely then to lead to kind of 129, 128 at least being found as a potential area. So it's somewhere that, as things stand, we need to be extremely mindful of. Obviously, we've seen a very weak US dollar. However, with news and noise coming out about the potential stimulus package and that being signed off, obviously that's going to provide some major boost for the US economy, as that's going to give people money in their pockets to start spending. And obviously the fact that we do have all these potential datas out this week for the dollar, it all provides us with things to be very, very mindful of as we move into the week and beyond. So there's a lot to be, well, as we kind of said and discussed on Monday, the dollar in itself this week shows so much potential, so much promise for potential opportunities that it seems illogical not to keep an eye on it and to look as we kind of progress through the week. So we will keep an eye, we'll keep watch on how things progress and how things move regarding the dollar at the moment. But as things stand, obviously, there's very, very little reason as to why we wouldn't want to be looking at potential long positions and dollar strength as things stand. Below 25.80 is probably likely going to give us that run back to 24.50 and the 24.60 region that we've been harping on about for weeks. Obviously, we finally got down to there last week. So now that we've finally managed to get down that far, obviously where we go from there is very dependent, but the chances are that if we can break through this region at 25.80, then that is the likely situation. If we do start to see a run down towards those levels, that 25.80 region, then obviously we have broken the lows, and this new swing would act as a swing high. Therefore, we would have obviously quite a lot in the way of confirmations and confluences for the potential short from 25.80 down to 24.60. So there's a lot of pips and a lot of potentials still very much on the table when it comes to dollar CAD at the moment, which is obviously a massive thing for us. It's definitely what we want to be seeing as things stand. So we're probably going to need to see the London Open in order to kind of gauge a real kind of opinion on where price is likely to be heading. But as things stand at the moment, a pop back above the highs and this 26.50 region will probably lead us into long positions back to 27.50, 28, that kind of area. Breaks back below the 80 level are going to give us that confirmation necessary to want to look to short back down to 24.50. Dollar yen. Obviously, we broke through our little ascending trend line. I'm just going to get rid of that. And I'm also just going to delete the alert that is in place at the moment and look to go through and set some fresh alerts in a minute. Obviously, we have seen that push to the upside. The very weak yen still playing trend at the moment. Now that is starting to kind of subside a little bit, it looks like we might see some potential yen strength come in. One thing I do want to have a look at in a minute is the possibility of pound yen short. But the failure to break the highs as things stand on dollar yen could lead us into a potential drop below the 70 region. If we can get back below 106.70, then the short play on dollar yen looks highly probable. And something that we do want to be very mindful of. Again, we want to get through the European Open and through the London Open before we see where we're going to go and what presents us with the most probable situation. But as things stand at the moment, obviously the fact that we had broken back below these lows and the fact that we're failing to break the highs is starting to lead us into that impression that downside might prevail here. We do just need to be very mindful to get back below the 70 region. 106.70 is the key to any potential shorts, but obviously we can see from 106.70 down to 105.80, 105.70 is a reasonable drop and still presents us with quite a substantial amount of pips. Therefore, it's still very much a position that we are interested in taking. A break above 107 will obviously lead into those longs that we've spoken about back to 108. Still plenty of movement, plenty on offer when it comes to the dollar. But the fact that the yen looks like it might want to strengthen up is obviously a big thing for us too. So Aussie Swiss currently looking to break the highs. We will keep an eye. CAD Swiss not low. Dollar CAD not really doing a lot. Dollar yen at the moment shaping like it might fancy a run down. However, that 70 region is key for us as things stand. Euro dollar was short in this yesterday, came out of it, did have a sell limit set at 2040, came out of that pretty sharpish when it became apparent that that wasn't going to go our way. We've pushed back up into the previous resistance region, previous support zone. Have seen a quick spike in rejection this morning. I don't, however, think if the dollar doesn't shape up like it wants to strengthen, then I think there's very little reason as to why we would want to look at potential shorts here. And in fact, we should probably turn attentions to longs above 21 back to kind of 22, 22.20, that kind of area, that region. In the way of fundamentals, obviously we have dollar fundamentals out this afternoon, later on today, that we need to be very mindful of. But off the top of my head, I wasn't overly aware of anything surrounding the euro. We'll just have a little look. Obviously, the pound budget is out today. Positive Aussie GDP last night. That was kind of expected. Yeah, non-farm employment changes. So yeah, apart from the pound budget that's out today, that's usually comes out kind of around about 11. Somewhere around lunchtime, that typically starts to get released. But apart from that, obviously, employment changes for the US, that's going to be the big one for the day when it comes to fundamentals. That's where I think we really see. I think with the dollar at the moment, we're probably very much waiting on some form of positive or negative news or data to come out to really push the pair on. I imagine that as things stand at the moment, there's obviously quite a lot of orders set up surrounding the dollar, but we just need something to catalyst and drive those to see those really push on. So as things stand above 21, I would start to kind of draw attentions to the possibility of longs back up to the upside. Come out to the higher time frame now, and obviously we can see that we've broken back below previous lows, broken back below. So the fact that we've driven up and we're starting to see rejection away, this would be the ideal area, the ideal scenario for us to see as a potential lower high. However, there is obviously a lot of noise surrounding this area that we want to be very mindful of as well. The potential to spike up as high as 121.20, 121.40. But anywhere that we're trading below those levels, I think anywhere below 21.80 at the moment, it would be illogical to look for longs. It just doesn't make any sense. As things stand at the moment, I think the short side of the pair, the short side of positions looks the most logical. It just looks like we need a breather and that price is prepared to range for a little bit. Therefore, you're quite likely to see a range between 21 and 20 or that kind of region, or 21 and 2020, 2030. So all the time that we're trading around that region, there's probably going to be a little bit of consolidation. Breaks back below 2020 though should or would hopefully see us lead into the potential to drop further somewhere down towards 118.80 that we've already spoken about previously. Pound New Zealand, we've seen a little spike up this morning, but we've rejected away from the 80 level. We can see clear as day, obviously, as we're on the lower time frames here, that we are just ranging with the pair. We are sat in some consolidation that we are struggling to get below as things stand at the moment. However, if we break out below kind of 20, that 91.20 region, I could definitely see us pushing down towards 90.80. And if we've broken through that region, then there's very little to stop us from finding 18 at 89.80. So we'll be very mindful. The fact that we've rejected so hard away from the 80 level with that engulfing formation is obviously a positive. And the fact that this has come from the European Open, which means that this is just a fresh flood of fresh liquidity. We've come in, we've retested the highs from the Asian session, pushed back down. A retest of those lows at the 20 level then looks highly probable before seeing the potential for the break back below 91.20 and obviously the drive back down. Or that break above 92 is going to spell 93.20 for us. So we have potential options as things stand. We just need to be a little bit patient and mindful. But pound shorts, as we look quite probable. The only thing that's putting me off, really, I'm involved in Pound New Zealand already, by the way. But the only thing that's really putting me off pound shorts at the moment is obviously the budget release later on today. As I say, I just wanted to have a quick look at pound yen and the possibility for shorts given the dollar yen situation that we are seeing. I think we look quite probable for potential short positions. Certainly on the lower time frames, I don't necessarily feel like there's really an entry until we get through these lows. Once we kind of get through the lows around this 90 region, so probably going to look to wait as low as 48.80 before a potential position. But from 48.80 all the way back down to previous lows throughout this region at 47.50 still gives us quite a lot of pips. So 4 hours saying, just want to come have a look. You can see though, like the sustainable push that the yen has seen such a battering lately, that it makes sense that at some point that's going to have to flip and that's going to have to change and see that push to the downside at some point. So waiting for 48.80 to go looks like the best bet, especially when you consider if 48.80 goes, you've got 147.50. If that goes, you've obviously got a clear target back down at 145. So normally with pound pairs you have like 100 pip targets, but at the moment what we're actually seeing is like 200-300 pip targets between each region. And given the push to the upside, that is probably going to be quite sharp movements down if we can see some form of catalyst come into it. The same with obviously pound New Zealand, where obviously we've started to see that drive. Jesus, 2 seconds. Ooh, so many levels. I hate it. I've got to clear my chart. 2 seconds. So much noise. That's disgusting. Looks a little bit better as things stand. I do just want to pop a little highlighted box in through here just to understand that level as well. But apart from that, that looks much cleaner. So the potential to drop back below, as I say, that 91.20 region on pound New Zealand will obviously give us quite a nice push to the downside. As we come out to like the 4-hour time frame, you can see that we'd seen that large push back to the upside, but we're slowly just creeping and seeing price kind of flood back down. If we can get a catalyst or something to push us, I believe that around 91, we've probably got quite a lot of orders. 91, 90, 80, somewhere around that region. There's probably quite a lot of sell orders that will lead to a pretty sharp push down below. Probably likely to be a kind of 200-300 pip movement that comes at the back of that. So a drive back down towards kind of 1888 or 18850, somewhere around those regions, looks quite probable should we see that potential scenario unfold. So like I say, the budget is going to be the big thing for the pound today. Then obviously all eyes will turn to employment figures from the US. If obviously in the US we can see positive employment figures, the flood of liquidity that will come into the dollar from that US Open as well, will probably see some pretty substantial dollar movement. So that is something to keep an eye on. But as things stand, obviously Aussie Swiss and CAD Swiss. CAD Swiss not so much. Aussie Swiss I do fancy the long just because of the positive Aussie data. Let me just. What's Euro Oz doing? Mm. 4 hours not really showing anything. There's the potential with Euro Oz to take potential short positions as well. Pound Oz, you need to break through that consolidation lows before then probably seeing a run into the lows at 77.60. There's quite a lot of potential surrounding the Oz actually. If we can get below 78.20, I'd be quite interested in taking potential short on pound Oz. I'll sit down and do a proper analysis on it in a bit. Euro Oz, similar situation. Obviously we've broken above the highs, which isn't the ideal scenario. I'd probably wait out. I think I prefer the short on pound Oz. Certainly pound Oz, pound New Zealand, pound yen moving together would chuck out a silly amount of pips. So that would be where my preferred focus is at the moment. However, obviously your Aussie dollar is surrounding quite a key level at 78.20 at the moment. So I think breaks back below 78 will probably lead to shorts on that. That's probably going to have a knock-on effect through other Oz pairs. So we'd just be very mindful as things stand at the moment. I think we're just going to have to play things out. But yeah, I hope everyone has a decent day. Be mindful around lunchtime today. when obviously we start to see dollar and pound fundamentals start being released, those will cause some pretty seismic waves. But apart from that, it's a quiet day. So chill out, do what you're doing, stay safe, whatever it is you're up to, and I will catch up with people later on.